firing up the markets. Anand Deshpande, who's founder and CND Persistent Systems, joins us for a better understanding of their numbers. Anand, great to have you on the show. Good growth in Q1, so congratulations on that. Most of it driven by IBM Alliance as well as the IP-led business. Will reselling be a key incremental driver in forthcoming quarters? And why was digital as well as services soft in this earnings report?
Right. So overall revenue this quarter was $123.6 million. In terms of rupees, it was 834.28 crore rupees. The rupee revenue growth was almost 10.9% quarter on quarter. So overall, in terms of the revenue growth, both rupee appreciation and some of the reseller business that we have started in Europe contributed to the significant growth this particular quarter. The reseller business, just to explain what we have done, as I had mentioned in the January quarter, we have added significantly a team in Europe to sell and resell products that we are building. And as a consequence of that, this particular quarter, we had a deal that helped us increase our revenues in that bucket. We expect that on a quarter-on-quarter basis, we will continue to see revenue growth from the reseller business in Europe. And we are reselling some of our products, so that is a good revenue opportunity for us. This business will continue to be a little lumpy in the sense that every quarter we cannot predict exactly what that number will be, but it will be a decent number as we look at the overall year.
What's the traction expected in digital over the rest of the year after a relatively slow start?
So, see, in the context of digital business, we are starting to see technology as a big driver for growth in some of our business lines. And to help us focus our business, we have been focusing on three specific industry segments. One is in the financial area, the other one is in the healthcare business, and the third one has been in the industrial area. The industrial business is led by some of the European work that we are doing and some of our partnerships. But we are seeing good traction in the digital side, both in the healthcare side and in the financial services areas. A lot of this has been driven by the data digital kind of a story, specifically led by machine learning and some of the newer technologies that are contributing to the growth in the pipeline that we have for digital and services.
So you are a US driven company, and from that geography, 80% of your business currently kicks in. With the pickup in the US economy and also favorable currency, what should one expect from the European economy and also from the US economy?
So US business continues to be very strong for us across all segments, and definitely mostly in the digital and services business. We do expect the European growth to be not as strong as the North American growth. Most of our business comes from the US in those areas, and that will continue to be the focus this year as well. As I mentioned to you, our focus mainly has been in the healthcare and the financial services area. We have made some good investments in the healthcare provider space that will help us in growing the digital business significantly in those areas. One of the important things in that business has been the quality of what we are supplying has been quite differentiated in some sense, and also fairly good quality business that we are doing, which should give us long-term sustainable business in those areas. So I'm very confident about the growth in the digital and the services business if you look at it on a yearly basis. On a quarter-on-quarter basis, the variability will continue because of both the reseller business being very much a lumpy business to some extent, and many of the digital projects have been very project-driven starts, and there is a little bit of variability that we will continue to see in that business.
EBITDA margins, which have seen a strong sequential improvement in the first quarter, will be weighed down by wage hikes, we're guessing, in the second quarter. What's the range that you're looking to maintain still?
See, we are trying to exceed our EBITDA margins and the PAT margins from last year. That's really the goal that we have set for ourselves. And I think this quarter we had a healthy number. If you look at it along the year, on a year-on-year basis, I do still see that by the end of the year, we will be able to catch up on the margin front, especially if, as we see the growth rate kicking in. On the next quarter, we do have headwinds from the salary hikes, which would contribute to about 2% on the PAT level or EBIT level. But as the growth rate picks up, I do believe that by the end of the year, we should be able to absorb the salary hikes that we make in the next quarter.
You know, the expectation that you should grow in double digits this year is something that's gaining ground. How is deal pipeline and order book growing for you to be able to meet reality there?
No, certainly we want to grow more than double digits this year. There is no question about it. We had a 9 point some percent last year. Which was a disappointment in some sense, especially because of the last quarter. But I do think this year, we should do a lot better than that. It's still Q1, so it's very hard for me to make any projections. I think as we get further along, we will make those numbers specifically that we said. But in terms of the pipeline, I must say that we have a very healthy pipeline. We have made some good investments in healthcare and in financial services. Some of our activities that are working on in machine learning and others are starting to give us some good results. We have created some sales-oriented partnerships this quarter as well. Specifically, we made an investment in a company called Khazena, which is a managed data lake kind of a service that helps us share insights as well. So we have been looking at partnerships which are also helping us with the sales pipeline and the customer side. So, overall, there are a lot of positives in this quarter, and we hope that those will reflect in numbers over the rest of the year.
You have about 1,200 crores of cash on your books. As per the utilization plan and inorganic opportunity, what are you essentially assessing?
Right, so we have about 1,200 crores of sort of cash on the books right now, about $183 million roughly. And yes, the plan is to look at acquisitions in some sense, in specifically 2 or 3 areas. We want to see how to extend our footprint in the healthcare related areas and also in the technology side around data, ML, machine learning, and some of the areas there. So we are looking at specific niche companies to acquire in those kinds of areas. Also in terms of partners that we are working with, if we see something that can help us extend geographically, that is an area of interest, and we will leverage the balance sheet and the cash that we have on the book to make certain acquisitions, I hope, during this year.
Okay, Anand, good speaking with you. Thanks so much for taking the time out and highlighting how the earnings have been.